Well, last week we got the rate cut that we were looking for, and we also got the Fed chairman saying that jobs are not looking so great and inflation is pulling back, but yet rates are on the rise. What the hell is going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you another episode of the Daily Dose. My apologies, I was gone for a week. I was off the grid, folks. I was in Utah. I was backcountry in national parks, Zion Bryce, over in Moab Arches. Had a great time. So my apologies for being disconnected, but yours truly is back and here to stay. So, as I said, last week we got that rate cut. Everyone, phone ringing off the hook. Where are rates? Where are rates? Why are they not dropping? And here's the real reason rates are not dropping because we need data. It doesn't really matter that the Fed said we maybe expect a couple of rate cuts. They also clearly indicate that it's going to be data driven. So until we get that data, and it is coming this week, we have non farm payrolls, we have inflationary data. If this data comes and is supportive, we are going to see rates move in a positive direction. But I caution, I think right now we are in a weird environment. The power of AI, the unknown of AI, the anticipation that AI is going to revolutionize profits for business and make them more efficient is driving the market where it's not so sexy to be in treasuries. Why would you go and get a 4% rate of return when you could chase 10, 15, 20%? Unless we get a stroke of fear where we see jobs pull back drastically, where a recession is on the horizon, or we see inflation numbers actually plummet back to the 2% range. So it becomes more appetizing for an investor to actually jump into treasuries. That could be sexy to some big investors. But until that happens, we have AI, all the anticipation of it hanging over our heads, and we have very little data to support what the Fed is saying. We need data to show us that jobs are pulling back as well as inflation. And until we get it, we're going to see higher interest rates. But this week, like I said, big data coming our way. Let's fingers crossed that we get what we're looking for so we can see rates take a dip as we head into the holiday season here and hopefully give some people that big, giant gift that they've been waiting for. All right, y'all. Have a good evening. I'll be coming to you tomorrow. Another episode of the Daily Dose. Hit that subscription button so you never miss a beat. Talk to you tomorrow. Cheers.